The future is uncertain, but your financial peace of mind doesn't have to be. With the global economy constantly changing, it's natural to feel concerned about what 2025 might bring. But what if we told you that you have the power to protect your savings and ensure your family's well-being? Now is the time to take control. Dear retail investors, savers, and families, economic uncertainty is a reality that calls us to action. This isn't about alarmism, but rather about smart, proactive planning. This is the time to strengthen our financial education and implement solid strategies to protect our assets. Join us on this informative journey to build a more secure financial future by analyzing risks and planning ahead. Diversification is the cornerstone of any financial protection strategy. It's the principle of not putting all your eggs in one basket, which is crucial for mitigating risks and protecting your savings. A crisis can affect different sectors unevenly, so allocating your capital is a smart decision. Allocating your wealth across different asset classes is essential. This reduces exposure to a decline in a single market or sector. Consider a balanced portfolio that can withstand a variety of economic conditions. Bank accounts. Don't concentrate all your money in one financial institution. Consider having accounts at different banks, taking advantage of deposit guarantee limits. This protects you against potential problems specific to one bank. Real estate. Investing in property can offer stability and protection against inflation. Real estate typically maintains its value over the long term, even during periods of economic uncertainty. Evaluate the local market and rental prospects. Precious metals, gold, and silver. Historically, gold has been a safe haven in times of crisis. Its value tends to increase when stock markets fall or inflation soars. Consider a small portion of your portfolio in physical metals or gold-backed exchange-traded funds. Diversified index funds and ETFs allow you to invest in a wide range of companies or sectors with a single purchase. They're an excellent way to gain exposure to global markets without having to select individual stocks. Look for funds with low fees and a solid track record. Stable government bonds. Although they offer lower yields, bonds from highly rated governments can be a stabilizing component. They provide a predictable income stream and are less volatile than stocks. They are an option for capital protection. Relying on a single source of income makes you vulnerable. Developing alternative sources of income is a proactive strategy for protecting your family. This gives you greater resilience to any unexpected work-related events. Freelance work or consulting. Use your skills to offer services independently. Online platforms make it easier to find clients and generate additional income. This can be a lifeline if your primary job is affected. Income-generating investments. In addition to capital appreciation, look for investments that pay dividends or interest. Dividend-earning stocks, bonds, or rental properties can provide a steady flow of cash. This supplements your active income, side hustles, or startups. Explore business ideas you can develop in your free time. A small business can grow into a significant source of income. Income diversification is key to financial security. Economic and political stability varies from country to country. Having a portion of your assets outside your country of residence can be a precautionary measure. This protects your wealth from risks specific to your country. Bank accounts in stable countries. Consider opening a bank account in a jurisdiction with a robust financial system. This can offer an added layer of security and access to different currencies. Research regulations and requirements before proceeding. International investments. Invest in stock markets from different regions around the world. This reduces the risk of a local crisis affecting your entire assets. Global funds or international ETFs are a simple way to achieve this. An emergency fund is the foundation of any solid financial planning. It's your financial cushion, designed to cover unexpected expenses without having to resort to debt or sell investments. Its purpose is to give you peace of mind. A clear goal. It aims to cover 3 to 6 months of essential expenses. This includes housing, food, transportation, insurance, and basic utilities. For added security, some families opt for a fund of up to 12 months. Accessibility and security. Keep these savings in secure, easily accessible accounts, such as a high-yield savings account. Avoid volatile investments for this fund. Liquidity is paramount. Constantly review your savings goals. Review and adjust them as your circumstances change. An increase in family expenses or a new job responsibility may require a larger fund. Planning is an ongoing process. Automation sets up automatic transfers from your checking account to your emergency fund each month. This ensures you save consistently and effortlessly. Make saving a priority. Debt, especially high-interest debt, can be a huge burden in times of crisis. Reducing them is a priority to protect your financial stability. A lower debt load gives you greater flexibility. Prioritize eliminating costly debt. Focus on paying off high-interest debts, such as credit cards or personal loans. These debts grow quickly and can consume a large portion of your income. Relieving these burdens is crucial. Payment strategies. Consider methods like the snowball method, paying off the smallest debt first to build momentum, or the avalanche method, paying off the highest interest debt first to save money. Choose the one that best suits your budget. Avoid new debt. In an uncertain environment, it's wise to avoid taking on unnecessary new debt. If you need a loan, shop around for the best terms and interest rates. Caution is your best ally. Debt consolidation. If you have multiple debts with high interest rates, consolidation may be an option. A consolidation loan with a lower interest rate can simplify your payments and reduce your overall cost. Carefully analyze the terms. Investing wisely is key to growing your wealth, even in uncertain times. Investment planning must be strategic, seeking a balance between risk and return. It's not about avoiding risk, but rather managing it. Safe haven assets. Invest some of your savings in assets that have historically proven resilient. Gold, as we mentioned, is a classic. Real estate, if chosen well, can also be one. Well-diversified index funds offer exposure to a broad market, reducing the risk of any single company. Keep your capital in cash. Having a portion of your capital in cash allows you to take advantage of investment opportunities when markets fall. Crises often present attractive prices for quality assets. Liquidity gives you buying power. Long-term bonds. In a falling interest rate environment, long-term bonds can offer attractive returns. Their value tends to increase when rates fall. They are an option for diversifying and stabilizing your portfolio. Explore emerging markets with caution. Emerging markets can offer high growth potential, but they also carry greater risks. Instead of betting on entire countries, focus on selecting individual stocks or funds with expert managers. Research is vital. Rebalance periodically. Review your investment portfolio regularly, and adjust it to maintain your desired asset allocation. If an asset has grown significantly, sell a portion of it to invest in others below your target. This keeps your risk profile under control. In the digital age, the security of your finances depends not only on the markets, but also on the protection of your information. Cybersecurity is an essential component of protecting your savings. Don't underestimate digital risks. Two-factor authentication, 2FA. Always enable 2FA on all your financial and email accounts. This adds an extra layer of security, making unauthorized access much more difficult. It's a simple but effective measure. Constant updates. Keep your devices, computers, mobile phones, and banking apps up to date. Updates often include security patches that protect against new threats. Don't put off these updates. Use strong and unique passwords. Use complex and different passwords for each account. Consider using a password manager to securely remember your passwords. Avoid using obvious personal information in your passwords. Beware of phishing. Be extremely cautious with emails, messages, or calls that request personal or financial information. Always verify the source before clicking on links or providing information. Scammers are becoming more sophisticated. Review your statements. Regularly monitor your bank and credit card statements. Report any suspicious activity immediately. Early detection can prevent further losses. Knowledge is power, especially in the financial realm. A solid financial education allows you to make informed and confident decisions. It's the most profitable investment you can make in yourself and your family. Continuous learning. Take the time to learn about personal finance, saving, and investing. There are countless resources available: books, online courses, podcasts, and blogs. The more you know, the better prepared you'll be. Stay informed. Keep a close eye on economic news and financial markets. Understanding the factors influencing the economy will help you anticipate changes and adjust your strategies. It's not about reacting in a panic, but rather about understanding the situation. Seek professional advice. If you feel overwhelmed or need specific guidance, consider consulting a certified financial advisor. A good advisor can help you create a personalized plan and navigate the complexities of investing. Make sure they're an independent professional. Teach your family. Share your financial knowledge with your children and other family members. Instilling good financial habits from an early age is a priceless gift. Financial education is a legacy. In times of uncertainty, optimizing your expenses is a smart strategy to free up capital and strengthen your financial position. Every euro saved is a euro you can allocate to your protection or investment. Detailed budget. Create a detailed budget to understand exactly where your money goes. Identify fixed and variable expenses. A budget gives you control and visibility over your finances. Identify unnecessary expenses. Analyze your budget and look for areas where you can cut back. Unused subscriptions, frequent meals out, or impulse purchases are good places to start. Small cuts add up to big savings. Prioritize the essentials. Make sure your spending covers your basic needs first. Housing, food, healthcare, and transportation. Everything else is secondary and can be adjusted if necessary. The hierarchy of expenses is essential. Negotiate and compare. Don't hesitate to negotiate rates for utilities, internet, insurance, or compare prices before making major purchases. A little research can save you a lot of money. Be a smart consumer. Cook at home and plan your purchases. Reducing meals out and planning your grocery shopping can lead to significant savings. Avoid impulse purchases and make a list. Planning is key to saving. In addition to the strategies above, there are additional principles that will help you stay calm and make wise decisions. Financial resilience is as much a matter of strategy as it is of mindset. Avoid panic. In times of market volatility, the knee-jerk reaction may be to sell everything. However, emotional decisions are often the worst. Stay calm and review your long-term plan. Panic is the enemy of investing. Don't sell at a loss without analysis. Before selling assets on the stock market, assess the situation objectively. Has the company or the market fundamentally changed? Or is it a temporary correction? Rebounds often follow declines. Automate your savings and investments. Set up automatic transfers to your emergency fund and investment accounts. This helps you save and invest consistently without relying on willpower. Pay yourself first. Consider investments in resilient sectors. Some sectors, such as defense, utilities, or consumer staples, tend to be more stable during recessions. Research whether these sectors fit your risk profile. Maintain a long-term perspective. Crises are part of the economic cycle. If your investments are aligned with your long-term goals, short-term fluctuations will be less worrisome. Patience is a virtue in investing. Review your insurance. Make sure you have adequate insurance. Health, life, and home insurance to protect you and your family from unexpected events. Good insurance is a financial safety net. It is important to remember that the economic situation is uncertain, and each person must evaluate their own financial situation and make informed decisions. This is a path of constant learning and adaptation. Don't leave your financial security to chance. Proactive planning is your best defense against uncertainty. We invite you to apply these strategies one by one to build a stronger and more peaceful future. Ready to take control? Start today by reviewing your budget, strengthening your emergency fund, and diversifying your investments. Share this knowledge with your loved ones, and together, let's build a financially stronger community. Your financial future will thank you for it.